So here's a stock that I don't really talk about too often because I'm primarily dabbling in very much big tech, hardware, and software, and I'm very much a growth investor. But I will say, if you had bought Walmart in 2022 or even in 2009 during the great financial crisis, I mean, this company could have easily produced you a lot of return. So, welcome if you are new. I put out videos on this YouTube channel Monday through Saturday, free educational content on the weekends, either Saturday or Sunday sometimes. And if you enjoy my content, definitely smash all the buttons. You know what to do here. Let's dive right into this one. So, Walmart just dropped their earnings. And, I mean, by all means, they very much came in line. Why is the stock down by 9.37%, almost 10% here? It's because, honestly, in my opinion, Walmart was priced for perfection. And they really did not come in with kind of like a shock and awe earnings in a way. When you have a company, a stock, that is very much priced at perfection, and understand that the company and also stock price are two different things. You can have a great company and a terrible stock price. You can have vice versa. You can have a terrible company, but the stock price just continues to go up. Those situations, though, tend to reverse very much over time in a big way, which leaves people kind of holding a bag, very large bag for sure. So, I kind of really want to talk about Walmart and when theoretically I would be interested in buying Walmart. Now, Walmart is the top banana, the king of staple companies out there. Staples are basically consumer-driven companies. Very, very not aligned to big tech. Obviously, if you are a growth investor, you're going to look at Walmart and be like, wait, what? You know, you're talking about a company growing like single-digit percents year over year. Yeah, you know, no way, Jose. No. I want a company that's growing with a compound annual growth rate like SoFi 30 plus, AMD 30 plus, so many other, you know, growth companies out there, right? Even Meta, when they get a hold on their CapEx spending, you're talking about like a Mag 7 company, magnificent company that's putting up close to 30% of a growth rate. Like, very much more attractive for growth investors, especially big tech investors, than pretty much Walmart. But I'm going to go ahead and show the charts here because it is utterly remarkable the performance that Walmart has very much done, especially over the last, like, several years. It really is. So, firstly, understand, and by the way, these candlesticks on the screen represents one day, but I'm going to go ahead and zoom out even farther, because if you are looking to very much invest in companies, which you should always do your due diligence, I've done mine, and one thing that I always really say that is not financial advice, is very much common sense. You gotta zoom out fully and look at everything. I really do love, especially looking on the weekly chart when zooming out even like farther. And on the weekly chart, it's kind of really surprising, okay? Totally ignore pretty much what is happening right now for Walmart. Obviously, from all-time highs, we are very, very much down. Let's see. My screen is glitching here. Come on, man. Come on, TradingView. There we go. You're talking about we're 30% down from all-time highs. So, I mean, hey, you're a trader out there, 30%. Maybe it's good, maybe bad. When is Walmart actually going to regain that 30%? In my opinion, it's probably going to be very much more so maybe into the end of this year. And I'll talk a little bit about that more at the end of this video, why I think that Walmart could very much be at all-time highs by the end of this year. But I mean, hey, down 30% from all-time highs, you're talking about like the greatest consumer-driven company in the world, the top banana. You know, it seems definitely, I mean, hey, if you're super bullish on Walmart, it seems kind of a little bit of attractive, right? Now, let's go ahead and look at Walmart during 2022. It's very interesting, right? So, theoretically, if you had bought Walmart during 2022 bear market, okay? Bear market, 2022. Let's go back to December 21st, pretty much when the market topped. Call it even at, let's say, 50 bucks. Well, you basically see the low on 2022 at 39. So you're talking like Walmart was down by 20% in the bear market. And what percentage points are we up since 2022? Let's go ahead and say that you built a super long position here in Walmart, basically from 2022 low, right? What percentage points would you be up on Walmart essentially to go to their highs? Well, basically pretty much if you had bought Walmart 2022, you're talking about 4 years later, you'd be up a whopping 235%. Now, from a long-term perspective, I mean, is that attractive? If that fits into your strategy, I mean, hey, 235%, I mean, you're talking about a beyond double bagger. Yeah, that's pretty attractive, right? I mean, think of it this way. Think of it this way, that you basically have average gains from the major indexes anywhere between 7 to 11% every year. And you're talking in the course of very much like 4 years, you're getting 235%. Let's go ahead and look at the Qs, basically pretty much, right? Let's go back to the Qs on the weekly chart. Pretty much the Qs I very much like looking at a little more than S&P 500. But let's go ahead and look at the Qs, right? We have the Qs going back to very much, let's say pretty much at the lows of the Qs. If you had bought the Qs, you'd be up a whopping 180%. So has Walmart outperformed the market theoretically? Yeah. 235% versus 180% over here. Definitely outperforming the Qs. Let's go ahead and look at the S&P 500 just for some lows here, right? So S&P 500 obviously got murdered during 2022, but let's go ahead and say that you bought the S&P 500 back in 2022, okay? 2022, wow, look at that. 115%. So, what out of the three is a win-win chicken dinner? Win-win chicken dinner is obviously Walmart. Walmart in the last 4 years has outperformed the SPY and the Qs. Now, obviously, you can say, Nightmare, what about Palantir? What about, other companies? Well, no shit, huh? Obviously, Walmart is a value company. Okay, it's not a growth company. It's not a growth company even more, okay? But still though, Walmart being a value company has outperformed the SPY and the Qs. Okay, look, I mean, if you're looking like super long term on your retirement, I mean, you're going to take that extra you're talking about 235 versus 115, and then you go to the Qs and you're talking 180. Yeah, you're going to be taking that extra percent gainer. You're going to be taking very much a double up going off from the Qs, and very much you're going to be taking 55% extra from the Qs. Sorry, my bad. Beyond the double up on the SPY, 55% more than the Qs, okay? Walmart, very looked at as being the safe haven company, okay? Now, here's the reality. Hypothetically, if we were to enter into a bear market, would I build a Walmart position? Well, the thing about it is that for me personally, if we enter into a bear market like 2022, my money would be so much more attractive on so many of the buy the dip opportunities. You want to talk about stocks getting crushed like they did in 2022 Meta going below $100. I mean, hey, what's more attractive when it comes to big tech very much versus Walmart here, right? Let's go ahead and look at Meta, right? You want to talk about a gigantic drop in a bear market, right? Meta all the way now, you're talking about, yeah, let's go ahead and look at that. You're talking about $92 all the way up to the high of near $800. That's 765%. Obviously, you're not going to be perfect, but let's say that you go ahead and capture, let's say like 400%. Obviously, 400% is a lot greater than Walmart, right? But the thing about Walmart is that it's deemed as very much a safe haven stock. Now, would some of my money maybe open a position in Walmart? It really depends, honestly, how much Walmart goes down. I mean, if we look in the past by Walmart, you're talking about Walmart very much going down by 20% in 2022. I mean, Walmart very much recovered. You're talking about Walmart recovering in 2022. Why is that? Why did Walmart have a faster recovery than big tech? Here's why. We were in higher inflation environments. What does that mean? That means that, hey, prices are going to be a little bit more expensive, which means consumers are going to be spending money. We were not in a bad financial crisis like 2009 where people were losing their jobs left and right. 2022, a lot of people, like, they had money from 2020 stimulus, 2020 super epic bull market in the stock market, 2021 as well too. People, the consumer had money. They really did. So the thing about 2022, we didn't see Walmart very much get hit. We saw big tech very much get hit significantly. However, going back even further on Walmart, let's go back to when I was not even in the stock market. Let's go back to very much 2008, the great financial crisis. I mean, you're talking about Walmart being at $20, going down to 16. Yeah, I mean, like, okay, Walmart obviously remained stagnated in dead money for so many years. I mean, you're talking 2009 all the way up until friggin', you're talking 2012. You're talking multiple years. Walmart very much was dead money. What do I mean by dead money? The stock price just goes sideways. It doesn't really go up, doesn't do anything. It's just really kind of dead money. But I mean, hey, for anyone like super long-term investors like Warren Buffett kind of investing where Warren Buffett buys for like decades, if you had bought Walmart in 2009 and you have held on, my gosh, you're talking, just keep the number simple. The number simple, since 2009, Walmart is up by, whoo, yeah, you're definitely very much for a staple company, very much going to all-time high, 638%. Obviously, very much for people that dabble in very much value and not like growth accelerating companies, okay? For me personally to very much have exposure to Walmart, it would have to, one, be in a bear market, and it would have to be sending the stock price very much significantly lower. Very much significantly lower. Here's the reality of it. I would very much be deploying my capital into the growth stocks, into the big tech stocks during a epic bear market, and I honestly think that I would not have money left over to very much deploy into like Walmart. Walmart for me is just very much not attractive, but understand, please, don't be discouraged if you are kind of like a Walmart like individual. It's just that this YouTube channel and my sonar is very much more around fintechs, financial institutions, big tech. But I mean, you want exposure to the top banana of consumer-driven companies. Hey, Walmart is definitely Walmart ain't going anywhere anytime soon. Let me go ahead and say that. I'll definitely make a wager on that. a mental wager, that is. Not going to place any small time bets or anything. So, in my opinion, do I see Walmart very much recovering and hitting all-time highs? So, here's the reality. The reality about it is that we are in a AI infrastructure build-out. Even though we are in a AI build-out, I mean, like, this company has just followed in suit with very much like the AI infrastructure build-out. Obviously, consumers are still spending money. Yes, there are worries and concerns within Walmart, and obviously Walmart was very much priced to perfection here, and they didn't really come in with like a shock and awe kind of like earnings, in a way kind of like Nvidia's earnings, especially 2023, 24, right? Like, oh my gosh, what did they just come in with? Walmart's earnings were good, it wasn't something shocking and stuff, right? So the thing about it is that, hypothetically, if we enter a time where Walmart very much gets into an area where, or rather I should say, next year, there's going to be a lot of uncertainty, especially around capital expenditure spending. If these companies, such as Meta, Amazon, Google, and Microsoft, and also Oracle, and even SpaceX can be thrown in there too, if all these big chip spending companies are going to be pulling back, we're going to see a lot of pain. A lot of pain in hardware. Maybe then software can very much rock and roll again. And maybe then Walmart could very much go on another upward trend. Very much bust through all-time highs. But that's really my opinion about Walmart. Understand that I'm very much orientated to growth plays, not necessarily really a value company like Walmart. And there are plenty of tech value companies that I've been in, such as PayPal. Definitely was a pain to be in PayPal for a little bit. But yeah, I mean, there are plenty of value companies that I really get into. I just more so would rather have exposure to a value company kind of in the tech industry, rather than kind of like a very much value company like Walmart as pretty much the top dog here. Now, there are staple companies that I do follow and I very much look at. Hims is definitely one of them. Celsius, it's an energy stock, energy company. Hims, obviously, very much weight loss, and they're doing a lot of other stuff within their business model as well, too. But overall, Walmart, phenomenal company. It's just very much priced for perfection, and they really didn't come in with kind of like some shocking numbers in a way. All right, everyone, I'm going to wrap up today's video with saying stay motivated. Definitely do your research and due diligence here. Let me know down below if you want me to cover other stocks tomorrow. Definitely going to be talking a lot more, probably about crypto. Haven't talked about crypto in probably about a week or so. So definitely stay tuned for that video, especially if you are a crypto bull like me. See you all tomorrow for a brand new video, and later.